Hello and welcome to another episode of the Real Estate Investing Club. I'm your host, Gabe Peterson, and this is the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items for you. First, if you like this episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running far into the future. Second, if you're a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, I've created an ebook just for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All I charge is our admin costs to keep this show running. So if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says get the ebook in the upper right-hand corner to grab yourself a copy. With that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride. All right. Welcome back to another episode of the Real Estate Investing Club. Today we have Chris Larsen with us from Next Level Income. Chris is a jack of all trades when it comes to real estate investing. He's big on multifamily, but he also has experience in self-storage, my favorite, car washes, which I'm super excited about, short-term rentals, all, if you name it, I'm sure Chris has been there. So Chris, I'm super excited to delve into this. Welcome to the show.
Gabe, I'm excited to be here.
All right. I told you before we got on here, we like to start with stories. We like to hear how people got started. So why don't you take us back to the beginning of your story? How'd you get started in real estate?
Yeah, Gabe, thanks for asking. So I like to say real estate's a get rich slow game. And people look and they're like, wow, how do you do all this? Well, I started when I was 21 and I started like a lot of people with failure. And the failure was I was investing in the stock market and I was day trading in the 90s. And yeah, and it's, I got lucky. I had some success, as a junior in college, I was making about $5,000 a month day trading.
Oh, bad.
But yeah, it was good. But then there was bad days too. But even worse, there were bad nights or sleepless nights. And I just remember laying there. And even if you're doing well, right, day trading is not investing. I think that's important. You're basically creating this job for yourself. And I was laying there at 3 a.m. one morning before I got up and pounded like a monster drink so that I could, or no, they didn't have Monster back then. It was like a Red Bull, right?
Red Bull, yeah.
Yeah, Red Bull, the original. And it didn't give me wings. It just got me through like the morning there. And I was just like, I can't. I'm like, I'm 20 years old. I'm like, do I want to be 40 and be doing this? And by the way, I tell like the whole story in detail in my book that if you're listening today, you can pick it up at our website for free, nextlevelincome.com. Just click on the book link. And I'm happy to send you a copy. But long story short, if you want to read the long story in the book, I said, no, this is not for me. And I learned all I could about investing, true investing. I read over 250 books and I bought my first property at 21. And the reason I got into real estate, Gabe, is because I like the fact that you could use, little money down. I bought that first property with $3,000 of my own money. It was a $90,000 townhouse. I had a mortgage on that property. It was all in. It was like $600 or $700 a month. And I had 3 bedrooms and I rented the bedrooms for around $300 a month. I kept the big one.
Each individually.
Yep. Nice. Each individually to students because I was still in college.
Yep.
So I got to live in the big bedroom and I basically got to live rent free. And then what was really cool is because I didn't make a lot of money back then, and I was under the cap, I could take the losses from the rental property and write them off against my income. I worked for the school at the time. Wow. So I was making money after
you were
taxes.
Ahead of your game back there. I was never thinking about taxes when I was in college.
Well, we can talk. I actually went to a tax course by a former IRS agent. I think his name was Sandy Botkin, if I remember correctly. So picture a 20 or 22-ish year old kid sitting there in the front row of this tax course, right? But I think it's an important lesson. And the lesson is, if you learn the rules, then you're going to be better at playing the game. I tell people that, whenever they poo-poo, tax strategies or doing that, and like, oh, the rich don't pay their fair share. I'm like, if we sat down to play Monopoly and I read the rule book for the last 20 years, and by the way, it changes all the time with taxes, right? And then I have strategists on my team. And that I said, are you going to say that's a fair game? It might not be fair if you don't learn the rules, but certainly, I learned a lot from going to that course. I forget how I heard about it. And then I structured my investing strategy after that. And obviously real estate has some tremendous tax benefits. And, one little residential property, they're pretty good. But when you get into some bigger stuff, like you mentioned, Gabe, the multifamily, the self-storage, the mobile home parks, it can be pretty phenomenal.
Absolutely, man. There's a lot of good gems that I like from that starting story. But starting with day trading, I tried that a little bit, and man, I feel you. It sucks. The ups and the
It's
downs. It's like it's
it's
just too
brutal.
emotionally draining.
Yeah.
And even when you get
Yeah.
those big days, then the bad ones are right behind you. So I get that. And I
Yeah.
like that you said that you realized it's not investing, because it is a true job. And investing is really, in my opinion, it's something that comes, like you said in the beginning, over the long haul. It's not something that comes today. It comes 10 years from now because of what you're doing today. So great start to your story. You got into real estate investing. It sounds like you started with house hacking, which is a great start. If anybody out there
That's
is
what we call it
listening,
now. Yeah.
I think that is a solid strategy. I wish I did that in college, rented out rooms, because that's a really good way to go. But you didn't stay there for long. You moved on to the commercial side. How did you get into multifamily from those first few, house hacks?
Yeah, so you said it, I didn't stay there long. And the truth is it felt like a lot longer. Um, so 21, and then I ran out of money pretty quickly. I bought 5 properties. Was it 5?
Wow.
Built a nice portfolio. Some of those properties were pretty high quality properties. Between 500,000 $1 million properties. So, pretty solid
Wow.
properties.
Wait,
But
were
I
you
was
still in college at this point?
No, 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 no.
Okay.
So, yeah, to do that, I had to get a job, right? Because
Yeah.
I,
Okay.
ran out of capital, and then also banks are like, "Hey, like you don't make any money. We're not going to lend you any more
You're
money."
20 years
You
old,
know?
man.
Yeah, exactly. So I got through the first couple, and then I rapidly found out I got to go get a job. So I actually got my real estate license. I was working for State Farm, but ultimately, one of those 250 books I read was a book, and it was like 100 ways in how to make 6 figures, like 100 ways to make over $100,000. And I said, all right, what am I interested in? What have I done? What do I have a good skill set around? And sales kept popping up in these books, and these, like everybody is like, hey, you can make a lot of money if you're in sales. So I was fortunate working for State Farm. The agent I worked with, he introduced me to a friend of his that was in medical device sales. And my engineering degree is in biomechanical engineering, which I rapidly learned I did not want to be an engineer, because I didn't really like the idea of sitting behind a computer, all day. Well, when I found out about this, Gabe, I thought, wow, this is really cool. I can interact with surgeons, I can interact with the technology, and I can make good money. And I found out how much he made. I was like, wow, I can be accredited. And that was one of my goals at the time, was to find a career where I could be accredited, to have access to these investments that only the accredited had, which I learned from reading Rich Dad Poor Dad around that same time. And so I put my head down and I said, all right, I want to make as much money as I can. I want to get to be an accredited investor. So after I bought all these properties, I put my head down. I said, all right, I'm just going to make as much money as I can and start paying these properties off until I'm accredited. And it took about 10 years. I was about 30 years old. I'm kind of going from, that 21-year-old mark. And I picked my head up, had 2 kids at this point, and I looked at my portfolio of single family rentals, and we've been through the Great Recession. Fortunately, I'd stopped buying in
You made it through.
2005. Yeah, we made it through. Didn't lose anything, fortunately, because we followed the numbers, and the numbers weren't working after 2005. So we held tight, kept conservative amounts of loans and debt. And then I looked at the numbers, and at this point, I have an MBA in finance, and I'm getting about a 7% cash on cash return on my equity. So my
Okay.
return on equity. And then now that I'm accredited, I don't get all these great tax benefits that I used to get. So lo and behold, I'm making about 4% cash on my equity after tax. And I said, there's got to be a better way. And I was having the same conversation to somebody at a meeting with my wife. And he said, why don't you look into multifamily? This is around 2012, 2013. And I said, it's kind of the same. And he goes, well, there's some differences. Talk to my friends who he didn't say it this way, but they syndicate deals. So I spoke to them, met with them, and I was like, whoa, the demographics, which I write about in my book, the cash on cash returns, the total returns, and the tax benefits, and the fact that I could sell these residential properties, Gabe, that I manage myself and get higher returns in a passive investment were very appealing. So it took me less than 2 years, and we sold all those properties. Everything went into commercial real estate, and loved it so much that built a strategy with my first partner where we began syndicating these deals about 3 years later.
Perfect, man. I love it. That is it's a good solid trajectory going from, starting out house hacking, buying those single families, and then kind of getting into the world of multifamily. That's pretty good. And I like that once you got there, it's interesting that tax benefits were one of the catalysts and the motivations for you to get into multifamily, because I didn't know about any tax benefits until way after I was into commercial. So what were like the biggest from the tax side? What were the biggest benefits that kind of drew you into it?
Yeah. So I think, look, just from a real high level, one of the nice thing is multifamily apartments are classified as residential, and residential real estate, according to the tax code, depreciates on a straight line 27.5 year basis. So you get an advantage with multifamily over, say, just like your typical commercial property, which depreciates over a 39-year period. So you get more depreciation quicker. Yeah. The other thing is that multifamily has more depreciable assets in it. So when you buy an apartment complex, you're typically getting you're getting the washer dryers if they have them, all the stuff in the kitchen, the stoves, the fridges, all this stuff, the fixtures, the landscaping depreciates even faster than that, according to the IRS. Then we had this wonderful stroke of a pen through Congress in 2017, where they said you get more acceleration with this bonus depreciation concept. So they didn't have that, when I kind of set out on the strategy, but I said, you know what, ignore all that. If you take commercial real estate and I can get tax-free income, I can then take my gains and roll them forward through a 1031 exchange and delay paying taxes. So if I take $100,000 and turn it into $200,000 and then reinvest the $200,000, I show in my book how that is a massive difference over just a 20-year horizon. And look, if you're investing over less than a 20-year horizon, that's a fairly short schedule, in my opinion. So I think real estate is superior when you look at 10, 20 years, a lifetime, or even generational wealth, which I also talk about creating in my book. And I said, what is a superior strategy that I can learn today that's not going to be wiped out like my day trading strategy by an algorithm and computers tomorrow? And I can teach my children that, and I can repeat it. So you said, hey, Chris, you've done a lot of stuff. The thing is, it's all based on this value add strategy that I originally employed in multifamily. And the cool thing is you can do that with one house. You can do it with an apartment complex. You can do it with self-storage, which I also love, Gabe, that you mentioned. You can do it with mobile home parks, and you can even do it with car washes.
Yep. Yeah, I was going to say you didn't, there's all those benefits. You didn't mention forced depreciation for getting a property undervalued, adding the value to the property, and then making it a higher value. There's so many different benefits to real estate, which is why I love it. So you got into multifamily, you realize the benefits. You guys have been going down the multifamily path for a while, and now you've kind of branched out. You've already mentioned self-storage, car washes. I want to talk a little bit about those. I guess we'll start with self-storage because that is kind of my bread and butter over here. So what kind of brought you into self-storage?
Yeah. So listen, I liked self-storage. I liked mobile home parks. I liked multifamily. I even looked before we invested in our first multifamily deal, we syndicated our first multifamily deal at buying a car wash. So I liked all these strategies back then. It just so happened that that was the strategy that we chose to go into. Yeah. I think the wonderful thing is if you build your business around a value add strategy, which incorporates that forced appreciation that you mentioned, Gabe, you can really drive the value. So for me, going from a residential portfolio to multifamily, the demographic benefits. When we looked at this, I just put a podcast out that talks about kind of the updated data, how we need another, around about 4.5 million more units between now and 2035. Those are some really nice tailwinds.
I've actually heard,
So
and I'm sorry to jump in here, but I've
yeah,
heard
no
interesting
problem.
reports that there's a number of the larger markets,
Yeah,
particularly on the coasts, have
yeah.
actually hit supply demand curve where now there is an oversupply of multifamily housing, which I thought was kind of interesting because people have always been saying that we're so undersupplied on the multifamily side, and now CR or I can't remember. I think it's like which maybe Crexy or something. I can't remember who it was, but they said that there is, we have hit that mark. Is that something that you're seeing as well?
So it is, look, there is the macro picture, right? So we're
Mm-hmm.
talking about the country as a whole.
Yep.
About a third of those units are needed in California, Texas, and Florida. So if you
Okay. Okay.
extract those and you say,
Yep.
hey, we're going to build a bunch in New York City or DC, and these are markets, by the way, I don't personally invest in. We don't target, but we're targeting large markets where there are people moving. And the other issue is, so there's kind of this push and pull. So we can build new apartments, but that doesn't mean those are affordable.
Mm.
That those aren't affordable.
Yep.
So I think it depends, one, what market you're in, and two, what product you're talking about. So a lot of the urban core, the urban cores in some of these coastal markets, they were overbuilt,
Mm.
and the outperformers have been, these Sunbelt cities, the Southeast, the suburban markets have been outperforming
Mm-hmm.
the urban markets, and specifically garden style, which is kind of like 1, 2, 3, 4-story multifamily, has been really outperforming over the past decade.
That makes a lot of sense. And so you talked about demographics. That's kind of been a theme across, when you decide to buy multifamily. I'm huge on data. I love getting my hands on it. What are the sources that you go to when you're looking at a new metro to decide if the demographics are favorable for your investments?
Yeah, so we have a service we subscribe to, so we get really high level data through that. But if you're listening and you don't want to pay tens of thousands of dollars for a service, and you said, hey, like what markets are good for me? I love like United Van Lines. You can go on there and you can see where people are moving. You can
Oh,
also look
interesting.
at, yes, that's like real high level. You can also
Mm-hmm.
pull data from the U.S. Census Bureau, so you can look at what cities are growing. So that's kind of the top level. Like you want to be buying in cities that are large and growing faster than the national average. You also want to, in my opinion, those cities should be in states that are business friendly, that have landlord friendly laws. So I
Yep.
mentioned California, Texas, and Florida. We don't love California from an investment perspective because there's some challenges, excuse me, with respect to demographics. People are moving out of California, and there's some challenges with respect to landlord and tenant laws. So, we don't want to own a property where somebody can stay there for a year rent free and we don't have the ability to evict them. That's not a good business model.
Yep.
And then the other thing you can do is you can look, locally and say, hey, what type of employers do cities have? Right. So, Seattle has a ton of tech companies. It's got a lot of medical. We were just talking about some of the time that I spent out there. It has you know uh, defense contractors, and although I know Boeing's taken some hits here recently, but those are some things you also should look at. And then you can look at local data. And again, you don't have to be a subscriber to one of these expensive services. You can search locally and just say, hey, what is the average income? That's another great one.
Yep.
So I'll explain this in 10 seconds. If you want to rent something for $1,000 a month and you say, hey, I'm comfortable that's 25% of someone's income, well, then they should be taking home around $4,000 a month, say $50,000 a year. If the average income in an area is $30,000 and your strategy depends on you going from $1,000 to $1,500 a month, you may not have enough people renting there. If the
Yep.
average income in that area is $100,000 and there's expensive homes in that area, that's going to be on the other side. That's probably going to give you a lot of upside there. So hopefully
Perfect.
that gave kind of a nice top down
Yep.
perspective from that in something that everybody can use.
Yeah, that's a good rule of thumb. And if anybody out there is looking for a cheap or a completely free way to get demographic information, what I really like is bestplaces.net. It'll give you,
Use that site.
positive or negative net migration to metros. There's a good amount of data in there that you can pull. So that's a website to check out. I did
Love
take
that.
a look at the clock and we are running through our time. But before we move on, I want to talk about car washes because I told you
All
before
right.
we get on here. When I mean, ever since I think I was in high school, I just loved the idea of a car wash. I don't know why. I love going through them. They look like a fun business. They looked
They
easy to
are
run.
fun.
Yeah,
Yeah.
exactly. But a few guests have come on here and thrown shade to car washes. So why don't you give us the good about car washes? Because I know you like them. So tell us, why'd you get into them and what do you like about them?
Absolutely. So I think, listen, a lot of people have gotten into Airbnbs in the short-term rental space here in the past couple of years. They're like, hey, I'm just going to buy a house and I'm going to run it and rent it out short-term and do really well. Well, guess what? They haven't done so well. The top 10% have continued to do well, though, and do even better than they were. And the reason is the top 10% are running their short-term rentals like a business.
Hmm.
If you buy a car wash and you say, hey, I'm going to buy this piece of real estate, I'm just going to rent it out. Car wash is a business. So let's not conflate the two. Let's not pretend like we're buying car washes and running them like a multifamily property. And that's a great point. The point is you can't just take an operator off the shelf like you can with multifamily and plug it into a car wash. So we built an operational team.
There you go.
Here are the reasons why I like car washes, Gabe. First off, people are leaving the driveways. People typically don't wash their cars. When I do webinars and I have 20 people on, I say, hey, how many people here wash their own cars? Usually about 2 hands go up. And then when I say, do you actually wash the car yourself? And then one goes down and they say either one of two things. No, actually, my kids wash it for me, or no, I pay somebody. And I'm like, well, I didn't ask you, does your car get washed? So it's funny. So not a lot of people wash their cars. They prefer to leave and have it professionally washed. We focus on the express tunnel model. And the
Okay.
reason is
The ones
it's
you
going to take
drive
about
through, right?
the ones you drive through, or more
Those are so much
specifically,
fun.
that you get pulled through, right?
Yeah.
Yeah. And they got the colors in them. Private equity is moving into this space.
Mm.
And the reason is we have about 15 years to build to capacity for this model. Also, it has a monthly membership model. So you have monthly recurring revenue,
Yep.
which is great, right? So it doesn't matter if you're in Seattle and it rains, you're still paying your $30 a month, 20, 30, $40 a month, whatever it may be. The profit margins are pretty terrific. Typically 40 to 60% are the profit margins on here.
Wow.
And yeah, so if you buy the right type of car wash, we prefer the express tunnel model. If you have the right operating team in place, and you typically have 3, 4, or 5 people that are running one of these express tunnels, and you train them and typically reward them with compensation that is above the industry average, they should perform for you. So we've gone in and we've rapidly expanded monthly memberships in the locations we've bought, which again has that same effect with the forced appreciation. And then the last piece, Gabe, is that we're typically able to we're able to buy and then sell at about a 50% premium when we package these washes together. And the reason is only about 15% of the industry is owned by owners with 5 or more locations. So this is largely a mom and pop operation, right? So you have a lot of mom and pops. They're not accounting properly. They may not be staffing properly. They may not be optimizing the chemicals, the spray angles, the spray time, the sales, all of those things that we can come in and we can use to increase the net operating income, force the appreciation higher, package them together, and arbitrage the difference between our entry and exit price. And those are reasons why I love the space. But it's not as easy as buying and renting out a single home. It's definitely a business, and you must have the right operating team and the right operator. One, if you're going to do it, and then specifically as well, if you're going to invest in these.
All right. Who knows? Maybe I'll have to look back into those. But the mom and pop model, that does make sense. That's kind of what I figured in the industry. I didn't really have any hard data, but I kind of figured that a lot of them were owned by individuals. So yeah, makes a lot of sense to me.
You guessed correctly. Yeah, we're usually buying 1, 2, locations per owner, and then we're packaging them together for investors as portfolios. But it's like herding cats getting these things together for sure.
Yeah, I can imagine. Every time I go through them, I look at the number of people that are working at these facilities and I'm like, why are there so many people here? But I'm sure there's a reason. I'm sure you guys have nailed down those operations to a T for sure. All right, it is time. We are past the 15-minute mark. So it's time to jump into the quick question round. Are you ready?
Rock and roll.
Let's do it. It starts with books or any form of education. Give me two recommendations, one for general life wisdom and one for real estate specific.
Yeah. So general life wisdom. I love the book Lifespan. And Lifespan is about how aging is a disease and it's not inevitable. So if you want to have a bigger impact on this world, you want to enjoy the wealth that you've created, or you want more time on this planet to create more wealth and more of an impact, I think you can get a tremendous benefit from that. Is it cheating for me to recommend my own book on that
Not
real
at
estate one,
all.
Gabe?
Let's hear it.
Yeah. So again, nextlevelincome.com. If you click on the book link, I'll send you a copy of my book. And I go through the value add strategy that we employ in multifamily. But again, you can use a similar strategy for everything we've talked about today.
All right. And I will put that. Well, this will be the last question, but we're going to give a little preview here. I'm going to put that URL in the show notes. So if you guys want to get the book, just click a little more in the description. And in there, you can find that URL. I'm going to move us on, though. Next question is for your younger self. So if you could go to the Chris, who, let's say it's 11 p.m., he's freaking out about the trade he just made. Go to him, look him in the eye, give him one piece of advice moving forward.
Yeah. So it would be don't be afraid to ask for help.
All right, that's a good one.
I got a lot of help, but I should have asked sooner, and look, if you're listening, ask for help. People out there love to help, especially those that have achieved success.
Yep, absolutely. And it is amazing. You don't know what you don't know. I feel like that's really good advice because it's so true. Yeah. And so if you just ask somebody who's even one step ahead of you, they might have really good advice for you. So definitely reach out to me. I'll give my email at the end. You guys can always reach out for advice, which leads us to the next question. This one is the United States. It's a big place, a lot of square miles out there, a lot of places to invest. So give me one metro, one city that you are most excited about investing in today.
Ooh, that is one city. I mean, listen, I moved to Asheville, North Carolina, and I hope a bunch of people don't move here after I say this, about 15 years ago. And the reason is North Carolina was growing, the Southeast was growing. But Asheville was kind of this little gem with this high quality of life, lower cost of living. So I love it here. We still do deals here. We still have people moving here from all areas of the country. And if Asheville isn't your cup of tea, you can use the same type of strategy to find like the next hot spot in the country. Look for a place that people are moving. Look for somewhere that has maybe a slightly lower cost of living, higher quality of life, and something where if you look out 10 years, it's going to explode. And then go on that local website and they will tell you where they're devoting their infrastructure dollars. So that's exactly what I do here locally. I just look and see where the city's focusing money, and then I buy there, and then I go on to the next place a few years later.
That is really good advice, and not a lot of investors come on here and figure this out. It took me until I was doing a deal in Missouri or something, and I actually went to the local, economic development panel, and I had a conversation with them, and they told me exactly what they wanted. And so you guys, if you're thinking about a deal, go talk to the people in the city council. They can actually tell you what they want their city to look like. And there's a lot of red tape that will be cut if you're trying to do what the city wants you to do.
When they probably even have a plan on their website that says, hey, 2030 vision, here's where we're going to spend money over the next 5 years and where you should buy real estate. They don't say that part, but that's exactly what you should do.
But you can interpret it that way for sure.
Yeah.
All right, that leads us to the next question. This is second to last question. It's about tools, because tools are the backbone of our businesses. So point to one tool you could not live without.
I love my Calendly application. And the reason is, I think, listen, I mentioned Lifespan, right? Time is our most precious asset. So if you've already figured out how to block your time, then you need to figure out a way to automate the ability for people to get in touch with you and maximize your ability to do that. Whether you're an athlete, you're professional, whatever it is you're doing, a performer of any type, you need to maximize your time. So I love the ability to have people go on scheduled time at my convenience and their convenience. And then we can coordinate things like we did this show, Gabe.
There you go. You're actually the first person to say Calendly, but I think it's a great tool because I freaking
I'm
love
a calendar
Calendly.
Freak, man.
Yeah.
Yeah. My wife makes fun of me. Like my calendar is like, oh, it's time to shower. It's like,
all right, gotta go shower.
shower.
My calendar says to do so.
Every week, once a week.
There you go. Don't need any more. All right, that leads us to the last question. You've given us a lot of good advice, so thank you for coming on. I'm sure people want to reach out. You've already mentioned your URL, but say it one more time. What is the best way for people to get in contact with you?
Yeah, nextlevelincome.com, www.nextlevelincome.com. And also my personal email address on there is chris@nextlevelincome.com. If I've mentioned anything, you want to reach out to me, have any specific questions or anything that I can help you achieve your next level in the real estate investing world, please let me know.
Perfect. All right, so that wraps it up. If you guys want to get in contact with Chris, just click that link, as I mentioned in the show notes, nextlevelincome.com. And as I said, sometimes I slip over my words. As I said, that wraps it up. Chris, again, thank you very much for hopping on the show today.
Gabe Peterson with an E. It's been a pleasure.
All right. And for everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. Other than that, I hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode. Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode as much as I enjoyed putting it on, and we're able to pull some actionable advice that you can apply in your own investing today in the field. Before you go, we have a gift for you. If you're a new investor looking to get started or an established investor looking to take your investing to the next level, I've created an ebook just for you, available on our website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find deals that are actually deals, how to finance a deal with little to no money down, and how to exit those deals for maximum value. And if you get the ebook today, I am throwing in a bundle of bonuses, 7 of them to be exact. The first one will be the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating wealth in real estate. The second bonus is the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools, systems, and even the vendors we use to see the success that we do. And the third bonus is the top 100 best performing keywords pack, which will give you the exact keywords we use to target motivated sellers online using PPC ads. The fourth bonus is our contracts bundle for wholesaling and renting real estate, which will give you access to all the contracts we use in the field to execute all different types of transactions. After that is the Investors Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automatically from those calculations. This is a lot of bonuses that I said. I'm just going to keep going down the list. Number 6 is the Investors Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And the last bonus is the Wholesalers template for quick assignment cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. Whew, that is a bundle. So it's a mouthful. You get all of those bonuses for free when you download the ebook. All we charge is the admin cost to run the show. So if you're interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page to take advantage of that deal. And with that said, I hope you have a fantastic day, an even better week. Keep rocking real estate, and I look forward to seeing you on the next episode.